All right, there's an $18 nuclear stock that has attracted very powerful backers. Amazon is one of the largest shareholders. Dow Chemical is preparing to deploy its technology, and the United States government is helping fund its commercialization. And here's another name that caught my attention. Peter Thiel's investment firm recently disclosed a position in the stock. The company is X Energy. Ticker symbol is XE. And when you start looking at what's happening around this company, you can understand why investors are getting excited. Artificial intelligence is creating an enormous new electricity problem. Companies like Amazon are building more data centers, packing them with more GPUs, and trying to figure out where all that electricity is going to come from. And at the same time, the United States is pushing to bring more nuclear generation online. And right in the middle of these two trends is X Energy. The company's developed a small modular nuclear reactor designed to provide reliable power to utilities, industrial facilities, and potentially some of the massive data center campuses being built for AI. So, on the surface, this sounds like exactly the type of company we're looking for on Monday's stock hunt. A relatively new public company, a massive potential market, some extremely powerful partners, and a technology that could potentially solve one of the biggest constraints facing the AI build out. But there's another side to this story. There's a massive difference between designing an advanced nuclear reactor and actually getting one licensed, built, and operating commercially. And investors are not getting X Energy for nothing. At $18.67 per share, X Energy is already valued at roughly $7.6 billion. So for the stock to 10x from here, we're talking about X Energy eventually becoming worth somewhere around $76 billion. And that's the question we're trying to answer. Not whether nuclear power is a bright future and not whether AI needs more electricity. I think both of these arguments are pretty easy to make. The more difficult question is, can X Energy execute well enough to turn all of this interest into an actual fleet of operating nuclear reactors? Because if they can, there may be a much bigger business hiding here than simply selling nuclear reactor technology. But if it cannot, investors are already paying billions of dollars for growth that does not arrive. So let's start with the technology at the center of the entire bet. So XE's energy flagship reactor is called the XE100. And one of these first things I want to clear up is what we mean when we call this a small modular reactor. Because small can make this thing sound almost like a generator sitting behind a building. And that's not what we're talking about here. A single XE100 is designed to produce approximately 80 megawatts of electricity. It can also produce about 200 megawatts of thermal energy. And X Energy standard configuration combines four of these reactors into one plant. Put four together, and you're looking at approximately 300 megawatts of electricity and about 800 megawatts of thermal energy. So, this is a serious power plant. The technology is also very different from the traditional nuclear reactors most of us picture. The XE100 is a high temperature gas cooled reactor. And instead of using water as its primary coolant, X Energy uses helium. And the reactor uses a graphite core and what's known as a pebble bed design. And inside those fuel pebbles is another piece of X Energy's technology that is going to become extremely important later in this video, and that is the TRISO-X fuel. TRISO fuel uses tiny uranium fuel particles surrounded by multiple protective layers designed to retain radioactive material even under extremely high temperature. That gives the XE100 strong passive safety characteristics. But there's another reason this reactor caught my attention. The XE100 doesn't have to produce only electricity. Because it operates at high temperatures, it can also provide high temperature steam and process heat. And that opens up a much larger potential market. A utility could use an XE100 plant to generate electricity for the grid. And a data center operator could potentially use nuclear generation to support enormous amounts of computing infrastructure. But an industrial company could use the same technology for both electricity and heat. Think about chemical manufacturing, refining, and other industrial processes that consume enormous amounts of energy. That means X Energy isn't necessarily dependent on one customer type, and we're already seeing that play out. As Amazon is interested in XE100 because of electricity, but the company that could actually prove whether this reactor works commercially is interested in something more, and that is Dow Chemical. Dow doesn't just need electricity, it needs enormous amounts of industrial steam. And that's why X Energy's first commercial project is such an important test, because we're about to move from what the XE100 is supposed to do to whether X Energy can actually get one built. And that's where the story starts getting much more interesting. So now we know what the XE100 is supposed to do, but there's a much more important question for investors. Can X Energy actually get one built? And that's where Dow Chemical comes into the story. Dow and X Energy are developing the Longmont Generating Station at Dow Seadrift Manufacturing Complex in Texas. And this isn't a tiny demonstration reactor. The project calls for 4 XE100 reactors, giving the plant approximately 320 megawatts of electrical capacity. And the XE100 can produce more than electricity. Dow also wants the plant to provide high temperature industrial steam to its manufacturing operation. And that makes this project particularly interesting. Dow says its Seadrift site produces more than 4 billion pounds of materials every year. So if Longmont gets built, we're talking about advanced nuclear technology being integrated directly into a major industrial manufacturing facility. X Energy says it could become the first grid-scale advanced nuclear reactor deployment serving an industrial site in North America. But here's the part that is really interesting for an investor. This project has moved beyond a press release. Dow and X Energy have already submitted their construction permit application to the Nuclear Regulatory Commission. And in May of 2026, they received an important piece of good news, which was the NRC completed its environmental assessment ahead of schedule and issued a finding of no significant impact. It does now. I want to make this clear about what that means. It doesn't mean the NRC has approved construction of the XE100, and there are still regulatory steps ahead, but it does mean an important portion of the revenue has been completed successfully. And management expects the NRC's construction permit decision during the first half of 2027. And that could become one of the biggest milestones in the entire X Energy investment thesis, because right now X Energy has technology, it has customers, and it has money. It has a huge potential pipeline. What it doesn't have yet is an operating commercial XE100. And there's a difference between those two stages. And for me, Longmont is where the X Energy story starts moving from potential towards proof. And if X Energy can get through the licensing process, manufacture the fuel, and construct these 4 reactors, eventually operate them successfully at Dow, then it has something incredibly valuable, and that is a reference point. Future customers don't have to look at it rendering and ask whether XE100 can work. They can look at the Texas plant, and that's particularly important when we eventually get to Amazon. And Amazon isn't talking about 4 reactors. Amazon's potential opportunity is measured in gigawatts. But before you build dozens of reactors, it certainly helps to prove the first 4. And there's also another reason that I think Longmont has a better chance of reaching that point that you might actually initially assume. I think Longmont has a better chance of reaching that point that you might initially assume. X Energy isn't paying for this entire journey by itself. So one of the biggest problems with developing a new nuclear reactor is it costs a tremendous amount of money to get the first one built. And you're paying for engineering, and you're paying for testing, licensing, fuel development, manufacturing, construction, and you're doing all that before you've established a large fleet of generating recurring commercial revenue. And that's where the United States Department of Energy becomes a very important part of the X Energy story. The Longmont project is being developed under the DOE's Advanced Reactor Demonstration Program. The basic idea is to help advanced nuclear technologies cross that incredibly difficult gap between development and actual commercial deployment. And X Energy has received a substantial support. During its second quarter of 2026 earnings call, CEO Clay Shell said the Department of Energy had notified X Energy that it would receive up to $1 billion in cost-sharing funding for the Longmarch project. Combined with funding already associated with the program, Shell said the total would reach approximately $2.15 billion. And that's a huge number. But there's an important distinction here. I don't want anyone hearing 2.15 billion and thinking the federal government simply deposited that money into X Energy's bank account. And that's not what is happening. This is cost shared funding tied to the development program. X Energy and its partners still have responsibilities and costs of their own. But from an investment standpoint, the significance is pretty straightforward. The federal government is helping absorb some of the enormous costs and risks involved in getting X Energy's first commercial deployment across the finish line. And that's a big advantage for a company that's at this stage. Because if X Energy had to fund every dollar of reactor development, licensing, fuel development, and first deployment entirely from its own balance sheet, the capital requirements could become enormous. Instead, XE has government cost sharing helping with the first deployment, while its own balance sheet remains very well funded. And we'll get back into the actual fundamentals and the financials later in the video. And there's a large strategic point here. The government isn't supporting X Energy because AI stocks are popular. X Energy has been part of the DOE's advanced reactor effort for years. The objective is much broader. Build a domestic advanced nuclear industry, and X Energy is one of the companies that the government is trying to move from the engineering stage into the real-world commercial deployments. That does not guarantee success, though, and government funding cannot make an NRC approval appear. It cannot guarantee construction stays on schedule, and it certainly cannot guarantee that customers eventually order dozens of reactors. X Energy still has to execute, and it means that it does mean that XE doesn't have to tackle the hardest part of the commercialization completely alone. And if Dow becomes the first proof point, the next customer could change the scale of the entire story. Because X Energy already has a partner that does not want just one 320 megawatt plant. It has a partner thinking about more than 5 gigawatts of nuclear power, and that partner is Amazon. So Dow Chemical could give X Energy something that it desperately needs, and that is proof. But proving one nuclear plant could work doesn't get X Energy anywhere close to the $76 billion valuation. And for that, XE needs scale. And that's where Amazon enters the story. Amazon's relationship with X Energy goes much deeper than signing an agreement to potentially buy nuclear power. Amazon actually invests in the company. Amazon anchored X Energy's financing round in 2024. And following X Energy's IPO, Amazon beneficially owned roughly 25% of X Energy. And think about that for a second. One of the largest technology companies in the world is not simply saying, we think nuclear power could be interesting. Amazon has put capital behind this particular nuclear company, and there's an obvious reason why. AWS needs power, and the AI infrastructure build-out is creating enormous electricity requirements, and those data centers need power that can operate around the clock. And that's where nuclear power becomes interesting. Amazon and X Energy are pursuing the potential deployment of more than 5 gigawatts of XE100 nuclear capacity by 2039. 5 gigawatts is a completely different scale from the first Dow project. And remember, one standard 4-reactor XE100 plant provides 320 megawatts. So we're no longer talking about proving whether one plant works. We're talking about the possibility of eventually building a fleet of X100s. And we already know where the first Amazon-related project could go. X Energy is working with Amazon and Energy Northwest on the Cascade Advanced Energy Facility in Washington State. The initial configuration could provide approximately 320 megawatts, and the site could potentially expand to 960 megawatts. X Energy expects the construction permit application for Cascade to be submitted to the NRC during the first half of 2027. So if you're thinking about how this story could develop, there is a logical progression. Dow goes first. Dow helps establish the licensing and deployment pathway. Then Amazon could potentially take that model and scale it much further. But this is where we have to slow down for a second because the headline, Amazon and X Energy target 5 gigawatts of nuclear power, sounds almost like Amazon has ordered 5 gigawatts of worth of reactors, and it has not. Amazon has contingent deployment rights, project development arrangements, and priority manufacturing capacity. The actual number of reactors ultimately deployed will depend on projects moving forward. So I would not treat Amazon's 5 gigawatts as a backlog. I treat it as something different, which would be an enormous strategic opportunity with one of the best funded customers in the world. And that is still extremely valuable. Amazon has money and they're growing their electricity problem. And Amazon has a growing electricity problem. Amazon owns a significant piece of X Energy, and Amazon has positioned itself to potentially deploy X Energy's technology at a very large scale. And that's one of the strongest pieces of validation of this entire story. And remember that other investor that I was talking about at the beginning, and that was Peter Thiel. Thiel Macro recently disclosed ownership of 200,000 shares of XE. Now, I'm not going to overstate that. It's a relatively small position under the Thiel Macro portfolio. But what caught my attention is the rest of the portfolio. It's heavily invested to electricity and power companies. So now we have Amazon making a major strategic investment, Dow trying to deploy the technology, the federal government helping fund commercialization, and Peter Thiel's investment firm buying shares in the public market. That's a lot of validation. But Amazon is only one part of what X Energy says could eventually become a much larger reactor fleet. X Energy says its identified commercial pipeline represents approximately 144 potential reactors. Combined, that's roughly 1.5 gigawatts. Oh, I'm sorry, that's roughly 11.5 gigawatts. And this is where you can start to see how the bull case gets very large very quickly. We already know about Dow Chemical, that's initial deployment. We just covered Amazon's potential multi-gigawatt opportunity, but there's another major piece, and that's Centrica. X Energy and Centrica have entered into a joint development agreement targeting the potential deployment of up to approximately 6 gigawatts of XE capacity in the United Kingdom. And management has also said there's another potential project that's coming online. CEO Clay Sell said X Energy expects to announce an approximately 1 gigawatt project with an unnamed utility in the near future. If that happens, it adds another potentially significant customer to the story. So it's easy to look at all this and say 104 reactors, this thing is going to be enormous. But we need to make one distinction very clear. Pipeline is not backlog. And those 144 reactors are not 144 firm reactor orders sitting on X Energy's books waiting to be delivered. The number assumes customers exercise contingent rights and that projects actually move through development. And with nuclear power, that's a big assumption. Sites have to be selected, financing has to work, regulators have to approve projects, fuel has to be available, and construction has to happen. And customers ultimately have to decide to move forward. So I'm not valuing X Energy today as though 144 reactors are guaranteed, which they are not. But the pipeline does tell us something extremely important. There is a series of commercial interest in this technology at a potentially enormous scale. And this is where I start thinking about the 10X case differently. The bull case isn't that X Energy sells 144 reactors tomorrow. It does not need to. Imagine not only a portion of this pipeline eventually converts 10 plants, 20 plants, 30 plants. Suddenly, you're not talking about one experimental nuclear project anymore. You're talking about an installed fleet. And every one of those reactors has something in common. They need fuel, not once, but for decades. And that brings us to what I think may be the most overlooked part of the entire X Energy investment thesis. Because the biggest long-term business may not be simply be building XE100 reactors. It may be what happens after those reactors are built. And in the next chapter, we're going to look at exactly how X Energy plans to make money And that's where this 10x thesis starts getting much more interesting. So we talked about Dow, Amazon, and we talked about potential pipeline of representing 104 reactors. But there's still a really important question that needs to be answered. How does X Energy actually make money from all this? Because if we're asking whether this company can eventually be worth $76 billion, simply saying they're going to build a lot of reactors, that's not enough. We need a business model. And X Energy's potential business model has three major pieces. First is the technology, which is the XE100. XE Energy can earn technology and licensing fees, related fees, as customers deploy the XE100. Next, you have the services. That includes engineering, project development, and potentially ongoing services associated with the operating fleet. But the third part may be the most interesting, and that is that X Energy doesn't just design the XE100, it also owns the TRISO-X fuel, and that is the advanced nuclear fuel subsidiary. That's important because every XE100 that eventually gets built will need fuel. X Energy is developing its TX1 commercial fuel fabrication facility in Oak Ridge, Tennessee, and the company has been working with Oak Ridge National Laboratory on TRISO fuel development and manufacturing since 2016. But building a fuel plant doesn't solve the entire problem. You still need the raw materials. And X Energy has been systematically trying to lock down that supply chain. It has long-term agreements with Centrus Energy and General Matter for HALEU enrichment or HALEU enrichment. It has expanded its relationship with SGL Carbon for nuclear grade graphite. Think about what XE is trying to build here. It doesn't want to design a reactor and then hope somebody else can provide all the specialized fuel and materials required to operate it. XE is trying to control a much larger portion of the ecosystem, and that could matter enormously if the reactor fleet starts growing, because selling the technology is largely associated with getting the plant deployed. Fuel is different. Once that reactor begins operating, it keeps needing fuel. X Energy's own illustrative business model economics contemplate fuel and services revenue extending across an anticipated reactor operating life of roughly 60 years. Now, these are illustrated economics, and they're not a promise of future revenue, but they show us what X Energy is trying to become. Not simply a company that sells nuclear reactor designs, a company that potentially earns money when the plant is developed. Now, these are illustrative economics. There's not a promise of future revenue. They show us what X Energy is trying to become. Not simply a company that sells nuclear reactor designs. It's a company that potentially earns money when the plant is developed and when it's deployed and while it's operating. And every time those reactors need fuel, and this changes the 10x thesis for me. If X Energy builds one plant at Dow, the fuel business is not enormous. But imagine the potential if Amazon begins deploying reactors, and then Centrifuga, and then utilities, and then additional industrial customers. Each new plant potentially expands the installed base that X Energy can supply and service for decades. And that's where the economics could begin to compound. You build the fleet, you fuel the fleet, and then you service the fleet. And there's another reason I think TRISO-X deserves more attention than it normally gets. Advanced nuclear has a fuel problem. Many next generation reactors require HALEU, and domestic production capacity is still developing. X Energy can eliminate that bottleneck by signing contracts. Centrus and General Matter still have to successfully scale enrichment capacity. TX1 still has to successfully reach commercial scale production, but XE is addressing the problem before it tries to deploy dozens of reactors. And that's an important distinction, because one of the things we're looking for in a potential 10x company isn't simply a giant addressable market. We are looking for evidence that management understands what could prevent the company from reaching that market. And for X Energy, fuel is one of those constraints. and they're attacking it now. And that's why I think the long-term bull case for XE isn't simply nuclear power is coming back. It's what happens if X Energy creates an installed fleet of reactors and then supplies that fleet for decades. And that's the business model that gives us at least a theoretical path towards a much larger company. And now X Energy is trying to use another technology to potentially accelerate that entire process, and that is artificial intelligence. And there's an interesting loop developing between artificial intelligence and X Energy. We've already seen the first half of it. AI needs electricity. Amazon is building enormous amounts of computing infrastructure through AWS. And that growing power demand is one of the reasons Amazon is looking at advanced nuclear. But now we're seeing the other half. AI could potentially help X Energy deploy nuclear power faster. In July of 2026, X Energy became a founding Tier 1 partner in an initiative called Project Prometheus. The project is led by Idaho National Laboratory, NVIDIA, and AWS. It's a 3-year research initiative supported by the Department of Energy's General Genesis mission with $60 million awarded to the overall project. X Energy is contributing $10 million of private capital, along with access to technical information involving the XE100 and TRISO-X. And the objective is pretty fascinating. They're looking at whether advanced AI models can help improve some of the exact areas that make nuclear development so difficult and time-consuming. Things like reactor design, licensing, manufacturing, construction, operations, and even fuel fabrication. X Energy isn't starting from zero here either. The company already has its own internal agentic AI platform called Apex, which it says is being used across parts of its engineering, licensing, and operations organization. Now, I want to keep this in perspective. Project Prometheus isn't suddenly going to make a nuclear reactor appear next year. AI doesn't eliminate NRC requirements. It doesn't eliminate construction risk, and it doesn't eliminate the physical challenge of manufacturing reactors and nuclear fuel at scale. So I'm not adding billions of dollars to X Energy's valuation because NVIDIA's name appears in a partnership. That's not the point. What makes this interesting is where they're applying AI. Think back to the biggest problem facing X Energy. It's not demand. We already have Amazon, Dow, and Centrica showing interest. The problem is turning that demand into operating reactors. And if AI can help shorten engineering cycles, make technical analysis faster, and improve manufacturing, or eventually reduce the amount of time required to move a reactor through development, then it's attacking the exact bottleneck that matters. And there's something almost circular about the entire story. AI creates more electricity demand. That makes advanced nuclear more valuable. And now AI is being used to potentially accelerate the development of that nuclear technology. So I like Project Prometheus. I think it's another positive piece of the X Energy story. And it's not the reason I would buy the stock. The reason to own XE would have to be much bigger. Successful commercial deployment, because we've now built a pretty impressive bull case. As you've got Amazon, Dow, government support, a potentially enormous pipeline, and a recurring fuel services opportunity, and an effort to use AI to accelerate commercialization. And now we need to do the opposite. We need to try to break the thesis, because XE is already a multi-billion-dollar company. And before we call this a potential 10x stock, we need to look at the balance sheet, the valuation, and everything that could go wrong. So we've built a pretty compelling bull case for X Energy. Now let's try to break it, because this is where the current stock price becomes extremely important. XE closed at $18.67 on Friday, August 21st, giving X Energy a market capitalization of roughly $7.6 billion. So this isn't some $500 million company that nobody's discovered yet. The market already knows about Amazon. It knows about Dow. It knows about government support. And investors have already assigned billions of dollars of value to reactors that have not entered commercial operation yet. Now, X Energy does have something that I like at this stage of development, and that is a strong balance sheet. The company finished the second quarter with approximately $1.9 billion of liquidity, and it has zero debt. That's unusual for a company attempting something this capital intensive. The April IPO helped considerably, bringing in approximately $1.1 billion of net proceeds. So XE has capital available as it works through reactor development, licensing, fuel manufacturing, and its commercial projects. Revenue is growing too. Second quarter revenue came in at more than $54 billion, or I'm sorry, $54 million, up roughly 154% year over year. But we have to put that number in context. This is not $54 million of mature commercial XE100 reactor sales, as a significant part of X Energy's current business is still tied to development activity and government-supported programs. And the company remains unprofitable. XE reported a second quarter loss of approximately 15 cents per share. So this is still very much a commercialization story. And there are several ways it could go wrong. And the first is regulatory risk, as you see here. X Energy can sign agreements with every major company in the world, but if it can't get XE 100 projects through the regulatory process, the rest of the thesis does not matter very much. That's why Dow construction permit decision is such an important checkpoint. And then there is construction risk. Nuclear projects have a long history of delays and cost overruns, and X100 is designed around a modular approach that X Energy believes can improve deployment economics. But we don't know what commercial scale XE100 construction really looks like, and nobody's built the first commercial plant yet. And then we have pipeline risk, which is next. So this is why I was so careful earlier about 11.5 gigawatt number. There's a massive difference between 144 potential reactors and 144 operating reactors. Amazon doesn't have to exercise every option. Centrica doesn't have to build the full 6 gigawatts. Other projects can get delayed or disappear entirely. And then there is the fuel risk. I like what X Energy is doing with Centrus, General Matter, TRISO-X, and its other supply chain agreements. But signing agreements doesn't instantly create a mature domestic HALEU industry. That supply chain still has to scale alongside the reactor fleet. And then there's a risk that often gets overlooked when a company has a lot of cash, and that is a dilution risk. XE has zero debt today, and that's a strength. But developing advanced nuclear technology and building commercial fuel capacity consumes capital. And if timelines stretch significantly or costs rise, X Energy could eventually need additional capital. And one way to get it would be to issuing more stock. Finally, there's the risk that I think investors need to pay the most attention to, which is the valuation. XE is trading at $18.67, and its 52-week high is $37.10. So the stock is already roughly 50% below its high. That tells us two things. First, investors already have shown they're willing to place a much higher valuation on this story. But second, it reminds us how volatile expectations around advanced nuclear can be. And at around $18, the stock looks dramatically cheaper than it did at $37. But a $7.6 billion market cap is still a serious valuation for a company that has not commercially deployed its flagship reactor. That's why I don't think the question is X Energy a good company? There are a lot of things here that I like. The real question is how much future success are we already paying for? And that brings us to the final test. What would X Energy actually have to become for this $18 stock to reach $187? And now we can finally answer the question that we started with. Can X Energy 10X? And at $18.67, a double gets us to roughly $37 a share. Interestingly, that's right around where XE has already traded. A 5X gets us to approximately $93 per share and a market capitalization around $38 billion. But if we're looking for a 10X, that means approximately $187 a share, which would put the market cap somewhere around $76 billion. And that's an enormous company. And X Energy isn't getting there simply because Dow successfully builds 4 reactors in Texas. And for the 10X thesis to work, I think we need a chain of events. First, Dow has to prove, they've got to prove it. Longmont needs to move through licensing, construction, and eventually commercial operation, and that establishes the reference plant. And then Amazon's got to scale it. The 5+ gigawatt opportunity can't remain an option on a piece of paper. Amazon needs to begin converting portions of this opportunity into real projects. Then the rest of the pipeline has to convert. Centrica, utilities, industrial customers, potential customers we don't even know about yet. Next Energy doesn't necessarily need all 144 potential reactors to happen, but needs enough of them to establish a meaningful installed fleet. And then you got the TRISO-X, and it has to scale. The fuel business has to move from development into commercial manufacturing, because this is where I think the 10X case becomes much more interesting. If X Energy builds an installed fleet and then supplies that fleet with proprietary fuel and provides services over decades of operation, XE starts looking much less like a speculative reactor developer and much more like an advanced nuclear platform. That's a company that could potentially justify a valuation many times larger than today's. Not one successful reactor, but a fleet. But there are some very specific things that would need to make me more bullish from here. And what would change my mind in a bull case? Dow receives its construction permit, and that's the next major regulatory validation. And then I want to see TX1 come online and X Energy demonstrate commercial scale TRISO-X fuel production. And I want to see the Amazon Energy Northwest Cascade project advance through the NRC process. Then I want to see portions of that 11.5 gigawatt pipeline begin turning into firm commercial commitments. And eventually I want to see the first XE100 actually operating. Each one of these milestones takes another piece of risk out of the story. But the opposite is also true. What would change my mind in a bear case? And if Dow begins slipping materially, if costs start ballooning, and if Amazon slows its deployment plans, if the HALEU supply chain can't scale, or if X Energy repeatedly has to raise equity to fund commercialization, then the 10X thesis becomes much harder to defend. And those are the checkpoints that I want to watch, which brings us to the final score. And the first is technology, which gets a 9 out of 10. I really like the combination of the XE100 and proprietary TRISO-X fuel. It's not simply another company with a reactor design. Next, number 2, you got customer validation, a 9.5 out of 10. You got Amazon, Dow, and Centrica, and it's difficult to ask much stronger names at that stage. Next, you got government support, which is a 9.5 out of 10. As the DOE support is enormous and meaningfully helps de-risk the first deployment. But government funding isn't guaranteed commercial success. Number 4 is the balance sheet, which is a 9.5 out of 10. Approximately $1.9 billion of liquidity. You got 0 debt, and that's an excellent position for a company at this stage. Number 5, you got the commercial opportunity, which is a 9 out of 10. 11.5 gigawatts and 144 potential reactors gives X Energy an enormous runway. But remember, pipeline does not equal orders. Next, you got number 6, which is a business model, which is a 9 out of 10. This is one of my favorite parts of the thesis. As technology, you got technology fees, services, and potential decades of recurring TRISO-X fuel revenue. Number 7, you have competitive position. X Energy is not alone. NuScale, Oklo, TerraPower, and other advanced nuclear developers are chasing this opportunity too. But Amazon, Dow, and the XE100 design and X Energy's fuel strategy give XE a very interesting position. Next, number 8 is the execution regulatory, which is a 6.5 out of 10. This remains the biggest weakness. We still do not have a commercially operating XE100. Until we do, execution risk remains substantial. And the last is valuation, number 9. It gets a 6.5 out of 10. At roughly $7.6 billion, investors are already paying for a lot of future success. XE may be down substantially from its 52-week high, but they're still a cheap company based on what exists commercially today. So there you have it. You have a final score of 8.6 out of 10. And the verdict is high potential and high expectations. When I started looking at X Energy, I thought the story was going to be pretty simple, that AI needs electricity and Amazon likes nuclear. X Energy makes a small modular reactor, but there's a lot more going on here, and Dow could provide the first real world proof. The Department of Energy is helping fund that first deployment, and Amazon has made a major strategic investment and could potentially deploy gigawatts of XE100 capacity. X Energy has an identified pipeline representing 144 potential reactors. And the part I may like most is the TRISO-X gives X Energy a potential recurring business long after the reactors themselves are built. And that's why I can see the path to 10X. But seeing the path and actually reaching it are two very different things. And X Energy has to cross the hardest part of the journey. It has to go from potential reactors to operating reactors. And if X Energy successfully crosses that gap, $18 could look incredibly cheap someday. But if it does not, a $7.6 billion valuation could look incredibly expensive. So for Monday's stock hunt, X Energy scores an 8.6 out of 10. And now we got to do one more question. Does XE deserve a position in our $100,000 hypothetical Friday fund hunt portfolio? We're going to take everything that we learned today, look at the risk, the valuation, the potential upside, and answer that question on Friday. So make sure to like and subscribe so you don't miss it, as well as Wednesday's AI Factory. And if you want additional Stock Hunt Insider notes in the AI Factory and research that go along with these videos, you can find them at the Stock Hunter Insider on buymeacoffee.com. And thanks for watching, and we'll see you in the next one.